Sometimes in investment markets, in order to go forward, we have to go back. By that, what we mean is looking back in time. And if we think back over the last 30 years, the one key feature that we can use as a defining moment is by looking at a chart of the global population. And in particular, the increase over the course of this one single generation of 67% in the global population size. In particular, of course, this increase has come about through growth rates in China and India. And in a globally connected and consumerist world, this means increasingly economic power has shifted towards Asia, away from Europe and the US. This then, of course, has given rise to some of the underlying issues for control that we see in global markets at the moment, predominantly in the form of the global trade war that we see between the US and China, initiated during the course of 2018 in an attempt to reclaim some of this lost economic influence. The question, of course, is where this leads to. Most likely what we expect is this leads to a slowdown in global growth terms. And of course, the natural result of this is to see interest rates start falling, as expectations around inflation start falling, and as we see within markets are now increasingly pricing interest rate cuts rather than the interest rate hikes that we've seen most recently. Of course, from a global multi-asset perspective, this does mean one important aspect is that whilst we then retain a rather large weighting towards the equity space, we are cautious and hence we remain underweight towards the equity space. Bond yields, of course, have collapsed over the course of the last 6 months. And this is an important factor for global income investors, as what it does mean is that investors increasingly in search of income in a global context take one of two risks. Either they must go into the equity space in search of dividend yields, or they must increase their risk profile by investing into emerging market bonds. We think at this stage the emerging market bond space is in a sweet spot and is likely to see further gains going forward, but we don't think that this is at the start of a new bull market for their bonds.